What if you bought just one share of Apple every single month, starting 10 years ago? Would you be rich today, or just barely break even? The answer might surprise you, and it proves how powerful long-term investing really is. In 2014, Apple stock cost around $22 per share, adjusted for splits. And if you had committed to buying just one share every month, you would have invested about $2,880 over 10 years. But here's where it gets interesting. With Apple's stock splits, iPhone launches, and massive growth, your investment didn't just grow, it exploded. Today, Apple trades around $210 per share. Over time, your consistent monthly investment would have bought over 120 shares, thanks to stock splits and reinvestments. And guess what? Your $2,880 would now be worth around $25,000 to $30,000 depending on dividend reinvestment. In 2020, during the pandemic crash, Apple dropped to $60, and that's when your monthly investment bought more shares than ever. Then came the iPhone 12 launch and the shift to Apple Silicon, boosting stock prices again. Consistency during chaos paid off. This investing strategy is called dollar cost averaging, and it's simple. You don't time the market, you commit regularly no matter what's happening. Over time, your average cost stays low, and your gains multiply. It works with Apple, it works with ETFs, it can even work with crypto. Imagine if you did this with Amazon, Tesla, or even Bitcoin. You don't need luck, you don't need to be a genius. You just need time, discipline, and a plan. If you love smart investing stories like this, hit that subscribe button right now. I post faceless, simple, and data-backed finance videos, so you can grow wealth without stress. And next, we'll run the same test, but with Bitcoin.